Okay guys, so we are here. This is the weekly chart. Let me write it down. This is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Okay, this is the weekly chart. So first comes the interpretation of the candle. Now if you see the candle, this is the weekly candle for the week of May 16th. This is a very heavy bearish candle. So this bearish candle simply means that there are bear sentiments in the market and the market will continue to be bearish. As simple as that. Now let's talk about the technical indicators. So let's do the technical analysis here. First comes the Bollinger Bands as usual. This is the lower band of the Bollinger Band. This is the median of the Bollinger Band. Market has closed below the median and below the lower band of the Bollinger Band. This simply means that market is bearish through the Bollinger Bands. Then comes the moving averages. So if you see the moving averages, okay, moving averages are clearly saying that market is bearish because first comes the pattern of the moving averages, clear fan out. Secondly, the market has closed below the moving averages. Okay, so because of these two factors, it is clear that through moving averages, market means SP 500. Okay, market is clearly bearish. Now after the moving averages, then comes the Ichimoku. So market has clearly closed below the Ichimoku. This means that market is bearish through the Ichimoku. And this is what I told you last week and last week, that after 2 years, this was the first time when the market closed below the Ichimoku. Now, so this is a significator that there are bearish there are bearish sentiments in the market, and that the market is bearish. Now let's talk about some other technical indicators. Guys, if you have not subscribed to this channel, then you can subscribe to the channel, and also you can click on the bell notification icon so that whenever I upload this, the technical analysis and any other informative videos, okay, like I told you that I'm going to upload the videos related to the technical indicators. So whenever I upload this video, so you will get a notification. So don't forget to subscribe the channel. Anyways, let's talk about some of the technical indicators. First comes the MACD. MACD is moving average convergence divergence. So if you see clearly, MACD is less than the signal, and this is what I told you. So when this thing has happened here, okay, for the week of April, particularly April, I guess April 18th and April 25th, I told you that now because the convergence has failed, MACD is moving average convergence and divergence. So around April 11th and April 18th, MACD was trying to converge, but then this convergence failed. So I told you that now because the convergence has failed, this means that MACD is going to diverge. Means in simple words, it clearly means that market is going to be bearish, more and more bearish. So there will be very, very heavy divergence. So as of now, MACD is less than the signal, okay, and there is very heavy divergence. So this means that the market is bearish through the MACD. Then comes the stock RSI. Stock RSI, clearly it is bearish. Now there is one more thing. If you look into the stock RSI, the K channel is 0.00, and the D channel is 3.14. Okay, so this is very interesting that in the bear market, okay, whenever we see this thing, particularly when the K channel is 0 and when the D channel is going to be or is about to be 0, in that case there comes a short-term retrace in the market, because most of the people, they think that because the K channel is 0, okay, and the D channel is about to 0, this means oversold. But practically this does not mean that it is oversold. This clearly means that the market is extremely bearish or market is heavily bearish. This has nothing to do with the oversold or the overbought. Okay, but many of the traders, the retail traders, okay, they think that because the market is oversold, so they come into the picture, okay, and they start to buy. So this is the reason whenever the stock RSI, okay, particularly the K channel is 0 and the D is about to be 0, so there comes this wave in the market, okay, means a bull wave. So this bull wave is not from the institutional investors. This comes particularly from the retail investors who think that there is the market is oversold. So as of now, technically market is bearish through the stock RSI because the K channel is 0 and it is less than the D channel, which is just 3.14. Okay, but this is again this is a significator that yes, we can expect a short-term retrace in the market from the retail investor. Thereafter comes the divergence. So if you look into this, the divergence, so divergence is normal. Divergence in the closing prices of the candles. Okay, this is normal. Then comes the volatility. If you see that the volatility is about to hit the levels of March 2020. Okay, so in March 2020, we all know that what has happened in the March 2020. Okay, so I guess if there will be, just one more candle in the coming week, just one more bearish candle, in that case, we will see that the volatility has hit or has surpassed the volatility levels of March 2020, and this will be a new record for the market. So this has not happened in last 100 years, more than 100 years. This has not happened, and this was not seen. So this was first seen in March 2020. And if this happened, see, we are talking about the weekly chart. Okay. So if on the weekly chart, if there comes a bearish candle, means initially a retrace and then the market comes down, and then there comes a very heavy bearish candle, in that case the volatility will hit its all-time high of last more than 100 years. Okay, so as of now, market is extremely volatile, because the volatility is more than 184. Okay, so through all of the technical indicators, it is very clear and confirmed that on the weekly chart, market means SP 500 index, it is clearly bearish through all of the technical indicators. Now let's proceed to the daily chart to see what is going to happen in the coming week. Okay, in the very short term is Monday, Tuesday, Wednesday, Thursday, etc. So we will see what is going to happen. Okay, what the market is saying on the daily chart. Secondly, we will also deduce the probable movement of the market on the daily chart, like how exactly it is going to behave on Monday or on Tuesday, etc. So that you can prepare yourself accordingly, as you are doing for last many months if you are subscribed to this channel. So anyways, let's move on to the daily chart. Okay guys, so we are here and this is the daily chart. So daily chart means one candle represents one day, not 1 week or 1 hour. One candle means one day. Now let's talk about the support and resistance levels. So we have 4185. Okay, so market is not able to cross the 4185. Okay, even with a strong rebound or a strong retrace, market is not able to cross or hold above 4185. Okay, then comes the 4035. So 4035 is the immediate strong resistance for the market, because the market has closed at 3910. Okay, this is 4035. Okay, and also this is the 4035, like I told you in the previous technical analysis also, that 1 2 3 4, and then comes the fifth. This is the fifth candle. Okay, through the previous technical analysis. So five of these candles, okay, these candles, they failed to close above 4035. There was only one candle. Okay, like I always say that we are looking for two candles. So there was one candle, but then again the market closed below 4035. So 6, 7 and 8. So now 8, and if we include this one also, then 9. So 9 candles out of 10 candles have closed below 4035. So this means that 4035 itself is a very strong resistance for the market. So whenever market tries to rebound, whenever market tries to move up, then we will see that market will struggle around 4035. Okay, then comes the 3840. Okay, 3840 is going to act as an immediate support for the market. Thereafter the support comes to 3710. So 3710 will be the next support. Okay, other than that, the 3710, then comes a tight squeeze for the market, and this is where, okay, particularly these are the levels in 3500 and 3600 where market may try to consolidate. Okay, so whenever market comes below 3710, in that case market will hit around this is 3630. Okay, then 3565. So there will be a tight squeeze for the market. Okay, and in this particular zone, market will try to consolidate, but this thing will be more clear, okay, once we see that the market is coming out, that the market is coming down, the momentum of the market, okay, the other factors. So we will talk about that in our next technical analysis, okay, once we are done with this week. But as of now, you can say that as of now 3710 is going to act as a very strong support. Other than that, you can prepare yourself for 3630. Then comes this one at 3565. Okay, and then so on. So as of now, let's stick to 3565 because the market has closed around 3900. Okay, and coming down to 3500 or 3565 is okay, or up to 3600 is okay. Means S&P 500 may lose 300 to 400 points or like within a week, and that will be normal. Okay, so losing 300 or 400 points within a week, particularly in the bear market, that's perfectly normal. Anyways guys, so other than these levels, okay, if you notice that I have mentioned other levels also. If you see, this is 4150, 4149, this is 4110, this is 4065. Okay, very important resistance. Then comes 3988, then we have 3938, then we have 3883 or 3884, then we have 3810 or 3811, and this was 3811 or 3810. It was a very strong support for the market. Once the market hit this 3811 or 3810, then there was a sharp retrace in the market. So this is what I told you in the previous week. Then look for this, the 3810. So market will come down to this level and then there will be a retrace. Anyways, then we have 3776 or 3775, then we have 3740, then comes 3760, and so on. So these are the support and resistances. Okay, so this was all about the support and resistances. Now let's do the technical analysis. So first comes the interpretation of the candle. So let's talk about the candle. This candle, okay, see, it was May 20th, the Friday. So this Friday was the monthly expiry. Monthly expiry is on the every third Friday. Okay, so the open interest on the put side was more than the call side. We have seen that the market came down by more than 2%, and after hitting this, the 3810, in the last 1 hour there was a retrace in the market. So monthly expiry was one more reason why the market came down. Okay, see, market was supposed to come down, but not to this much. So market came down to this particular level or have lost more than 2% or 2.25%. Okay, it was because of the monthly expiry. Anyways, if we see this a candle, okay, it is a bearish candle and it is a bearish hammer. So if you see that this bearish hammer, okay, it is in the upright position. The head of the hammer, okay, it is here. The head of the hammer was formed after a retrace from the bear to bull. So there was a retrace, like bear to bull retrace, okay, and then this hammer was formed. So there are two interpretations of this candle. Number one is that because of the hammer, because of this, the bearish hammer in the upright position, okay, the market is expected to retrace. Now comes the look of the candle. If you see that this candle, this bearish candle, is different from all other bearish candles that are red in color. Okay, so whenever this kind of bearish candle is formed, particularly in the bear trend, then it is a significator because of the color of the candle. Then it is a significator that market is going to fall. Okay, the hammer is saying that there should be a retrace, but the color of the candle is saying that market should come down. So as of now, we cannot say or we cannot deduce like what exactly is going to happen, particularly on Monday. So on Monday, as of now, we cannot confirm anything from this kind of candle. Okay, because there are two meanings of the same candle. We will look into other technical indicators to see, okay, what is going to happen on Monday. Anyways, guys, let's do the technical analysis now. Okay, so we will talk about the technical indicators. So before I do the technical analysis, there is an update, okay, in this that Discord group, that last week we were able to complete one more cycle, okay, within 29 days, okay, in 3 trades, and we have achieved more than 40%, 42.57%. Okay, so as you know that through okay, through my Discord group, I give you more than 40% returns, okay, assured 40% returns. So this is what we have achieved here. So I have updated the sheet, and the same I have updated in this, the minimum 20%, okay, assured returns. So this is what I have updated in this sheet also, that we have achieved more than 40%, okay, within 29 days and only in 3 trades. Okay, but this was achieved for the Discord group where I'm giving more than 40% returns. Okay, and this particularly trade setup is for the minimum 20% returns. And also I've given the links of these spreadsheets in the description of the video, so you can take a look. And guys, whenever you are ready to join the group, whenever you are ready to make minimum 20% 40%, you can simply drop me an email. Now let's do the technical analysis. First comes the Bollinger Bands. This is the lower band of the Bollinger Band. This is the median of the Bollinger Band. Because the market has closed between the lower band and the median of the Bollinger Band, this means the market is bearish. Then comes the moving averages. So if you look into the moving averages, there is a clear fan out in the moving averages. Secondly, market has closed below the moving averages. Because of these two reasons, market is bearish through the moving averages. Then comes the Ichimoku. Now, if you look into the Ichimoku, that market has closed below the Ichimoku, market is trading below the Ichimoku, which means that the market is clearly bearish. Then comes some other technical indicators. First comes the MACD. If you look into the MACD, looks like MACD is trying to converge on the daily chart. So on the weekly chart, MACD is diverging, and on the daily chart, MACD is trying to converge. Okay, so if you see that MACD is negative 112 and the signal is negative 103, see the directional MACD is clearly bearish. Okay, clearly bearish. But here, what we are more interested into is that MACD is trying to converge. If on these 2 days, okay, if we see that there are two bull candles, or if we see that the market is moving up, in that case we can see that there will be a crossover in the MACD and in the signal on the daily chart, and then we will say, okay, MACD is diverging and we can expect a short-term bull market. Okay, not exactly the bull market, but a rebound, a retrace, a short-term retrace in the market. Okay, and that short-term retrace won't be limited to 1, 2 or 3 days, but that may be seen for 1 to 2 weeks. Anyways, as of now, the directional MACD is bearish. Okay, then comes the stock RSI. If you look into the stock RSI, the K channel is 26 and the D channel is almost 40. K is less than D and both are less than 50. Okay, so this clearly means that stock RSI is bearish. Okay, then comes the divergence in the closing prices of the candles. If you see that there is not much divergence in the closing prices of the candles, so this means the divergence is normal as of now. Then comes the volatility. If you look into the volatility is increasing. It is almost 105, but the volatility on the daily chart is not to the levels as it was in March 2020, because in March 2020 the volatility on the daily chart, it was around 150 or 160. Okay, but as of now, okay, on the daily chart it is just 105. Okay, so if we consider the volatility, then we can say yes, the market has a lot to lose before it can actually see its default direction, means the bull direction. So market still has a lot to lose because of the volatility. It is only 105. Okay, so once it is once it will be around 150 or 160, then only we will say, okay, now because it has touched or it has surpassed the levels of volatility levels of March 2020, so now we can expect that market is going to retrace, and now there will be a bull market. But as of now, okay, market has a lot to lose, market can come down, okay, because of volatility is expected to increase further. This means that through all of the technical indicators, okay, through all of the technical indicators, it is very, very clear that market is bearish, clearly bearish on the daily chart. Now we are going to deduce the probable movement of the market in the coming week, as we always do. So we will see how the market is going to behave on Monday, Tuesday, Wednesday, okay, and so on, and what you are going to do and where you will get your chance to enter or exit. Guys, there are a few more things that I want to share with you, and you should consider them very, very carefully. Okay, number one, that if you see S&P 500 has closed around 3,900, and if you think that this is the bottom, no, this is not the bottom. Bottom will be around 3,200 to 3,300. Okay, So when the S&P 500 comes and hits 3200 or 3300, then only we will say that yes, now that is the bottom of S&P 500 index, because this is the most common question that people are asking me, that what will be the bottom. Okay, so whenever you see market is it is hitting around 3200 or 3300, so this means that market may lose another 600 to 700 points. Okay, or in a worst case scenario it can come and hit 3000, but it is not expected to go below 3000. Whatever happens, it will be trading above 3000 only. Okay, yes, 3200 and 3300, it is standard. Okay, so bears can drag it down to this level. Okay, and in an exceptional case they can bring or they can drag it down to 3000, but not below 3000. Okay, so this is one thing. This was about the S&P 500 index, but that does not mean that market will come down. Okay, means market will fall and fall. No, market never works like this. So how the market works, it will come down, then it will retrace, then it will come down, then it will retrace. Okay, so in a staircase format. Okay, so it comes down, then retrace, comes down, retrace, and sometimes you will see that market is retracing more than it was supposed to retrace, but that does not mean that market is going to bullish. That will simply say, okay, now the market is going to retrace to some comfortable level, where the market will give you an opportunity to sell, and from that level the market will come down and then retrace, then down, then retrace, and so on. So this is how the market works. So this is the 3200 or 3300 level. So market is not expected to hit, okay, in the month of May or June, okay, or maybe in July. The market may take like 2 to 3 months, maybe 4 months, maybe 6 months, or by the end of this year. Okay, but this whole year, this 2022, as I have told you in the first and second week of January, okay, 2022, that this whole year market is going to be bearish. Market will come down and we are expecting a recession in the economy. Now there is one exception to it. Now the exception is that if the rise in the interest rates, okay, from the Feds, if it will be stable, or if it remains stable, like, you know, like 0.50 basis points, okay, or 0.25 basis points, so that is what market can adjust. So that's not a problem. But if the rise in the interest rate is like 75 basis points, okay, or more than that, in that case that will be pretty bad for the market. The other thing is that the Russia Ukraine war, okay, because of the Russia Ukraine war, okay, particularly the oil prices, okay, and because of the oil, all other, the transport, the commodities, means everything else, okay, is getting expensive. So because of these, the oil prices, okay, things are bad. Now if the Russia Ukraine war is over, so once the Russia Ukraine war is over, so that will give a positive signal to the market that yes, the war is over, and now the Russia will resume the oil and gas supply to the European nations. Okay, that will further stabilize the oil prices, the gas prices, the transport prices, the commodity prices, and overall that will be a relief to the economy. So whenever there will be a relief, okay, to the economy, when we think that market is going to stabilize, in that case the bear market will see a break. Okay, in that case there will be a sharp retrace in the market and the market will regain its bull movement. Now the other thing that I want to talk to you about, that this does not mean that, see, the market is coming down, okay, this is clear, but this thing does not mean that you cannot participate, you cannot make money. Okay, see, there are a few stocks, particularly in nasdaq. Okay, particularly in nasdaq, if you see that nasdaq is more than 30% down. Okay, nasdaq is I think it is around 32% down. Okay, so nasdaq is around 32% down. So there are a few stocks in nasdaq. For example, we have Netflix, okay, NFLX, then we have PayPal. Okay, other than that, we have some other good stocks that have already lost more than 70 to 75% of their value, of their market value. Okay, but these are the premium stocks. Okay, so if you look into the balance sheets of the company, the balance sheet is it is quite good. Okay, and the PE, particularly if you look into the PE, that the PE is far more less than what it used to be. When, for example, Netflix was trading at 700, okay, in the month of November, I guess October, November last year. And now currently Netflix is it is trading about 185, I guess. So you can clearly see that Netflix is 700. Netflix is more than 75% down. If you look into PayPal is trading at 80 or 82, whereas PayPal used to trade around 350 or 320. So it is again more than 75% down. So these are the premium stocks. So when we say S&P 500 is going to come down, okay, so the impact of this, the bear market of the impact of the overall bear market won't be much on Netflix, PayPal, and some other premium stocks, because they have already lost more than 70 to 75% of their value. Okay, so what I'm trying to say is that if you have bought the shares of the Netflix, PayPal, or some other premium stocks, or you have bought the put option, the call options of longer expiries of these, okay, in that case you can expect that you are going to make money, okay, means in spite of this, that the market is coming down. That's not a problem, because these stocks are premium stocks, okay, and in the long run they are going to give you the profits. So these are the two things, okay, that I wanted to share. And also, if you are holding some good share, okay, and if you are seeing losses, then do not worry, okay, you just need to pass this particular year, this 2022, and then thereafter everything will retrace, okay, the whole market will retrace, and then there will be a bull movement in the market, overall market, and then you will cover your losses automatically. All of your losses will be covered and you will make money. Well, guys, I am sorry that I took some of your time in explaining the market situation. Okay, particularly these two things. But I think this is worth sharing. Okay, because because of this you will be able to plan your near future trades. And let's deduce the probable movement of the market for the coming week. Okay, so if we talk about the probable movement of the market, then like I told you that the meaning of this candle, okay, as of now we are going to keep it neutral. But what we can see is that if on Monday, if the European and Asian markets, okay, if they are trading in positive, okay, if they are bullish, even if they are like 0.25%, 0.50% bullish, okay, in that case we can see that this retrace, whatever you have seen in last 1 hour, okay, this retrace will continue, and we will see that there will be a gap up open in the market, a gap up open in the American markets. This gap up open, okay, now again that see the same thing that I told you in the previous week also, but earlier, okay, earlier it was 4065, okay, earlier it was 4065, but now in this case what is going to happen? In this case 3940. So in this case 3940. Now this 3940 is going to act as a very strong resistance for the market for some reasons. 1, 2, 3, 4, 5. Because these five candles have closed below 3940. Below this is the 3940. So this 3940 is going to play a very important role in the market. If you see that market is opening above 3940, in that case expect the market to move up, but that retrace will be limited to this level, to this particular level 4035 and to 4065. Okay, these levels we are familiar with, and this will happen. Okay, this will happen if there is a gap up open and that open is above 3940. Now other than that, if you see that market is there is a gap up, or if there is a gap down open, in that case you can expect the market is going to come down first. Okay, so first the market will come down, and then momentarily it will retrace to either to this level or this level. That's it. Okay, and then it will come down, then it will further come down. Okay, finally when it will hit this particular level, which is 3710. 3710 is very strong support for the market. Market will hold at this level 3710. Even if it comes down, then it will retrace to 3710. So when it retraces to 3710, means it will hold around 3710. So after hitting the 3710, then only you can expect that the market is going to retrace after this, the 3710. This is 3710. Okay, so this is when the market is coming down or retrace. But if you see market is going to move up, in that case 4035, 4065, and then the market is going to come down. Okay, now if we talk about like to how far this market can retrace, so 4065, okay, and this is the 4035. So these two are going to act as very strong resistance for the market. And if somehow for some reason if the market is able to breach these two levels, then it will be able to breach all of these the moving averages. In that case it will be a short term bullish. Okay, a short term bullish means that this bull movement will not be limited to 1 or 2 or 3 days, but it will be there for at least a week or more than a week, like 2 weeks. Okay, but other than that, if the market comes down, okay, so in that case, so what will happen that whenever you see that market is unable to hold, okay, either at this level 3940, okay, or the immediate resistance at 398 3988 or 3990, okay, or these two levels, in that case the market will come down and you can comfortably sell. Okay, as simple as that. And whenever you see that market is coming down and it is hitting 3710, then it will hold. And if you see market is holding, in that case you can expect a retrace. Then only we can see, okay, now the market is retracing to for like 1 or 2 weeks. So guys, you can subscribe to the channel, and I'll be posting these the technical analysis and the educational videos on the technical indicators. You can learn, okay, what the technical indicators are in detail and how do we use the technical indicators, the strategies related to the technical indicators. And guys, if you want to make a minimum of 20% profits or a minimum of 40% profits, then you can participate and you can join the group. And I have given the link in the description of the video, so you can take a look, and my email address is also there whenever you are ready to join the group. So you can simply drop me an email.